ARE's commercial stock, ticker symbol ACRE. Is this the best stock to buy right now? ACRE is up 8.5% year to date, which is quite similar with the overall market. The S&P 500 is up almost 7%. On the 15th of February, ACRE presented quarter results where they beat on EPS actual but missed on EPS GAAP. They also reported a beat on revenue. The reason why people love ACRE is because of the dividends. Dividend yield sits at 11%, which is of course an insane number. But does this mean that ACRE is a buy at current prices, or is this a dividend trap? Well, in this video I'm going to show you real quickly what ACRE does, the most recent earnings, the fundamental analysis, dividends, and in the last part I'm giving you my price target to see if they are a buy or not. And I think you definitely want to see that part, so make sure to watch until the end. And I'm also very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does ACRE do? ARE's commercial focus on directly originating and managing a diversified portfolio of commercial real estate and debt related investments. ACRE reported fourth quarter GAAP net income of $2.9 million or 5 cents per diluted share. Distributable earnings of $23.9 million or $0.44 per diluted share. They also declared a dividend of $0.33 per share and a supplemental dividend of 2 cents per common share, which are both in line with the previous paid dividends. ACRE is focused on loan size properties of 10 million up to 250 million, with senior loan type or short-term transactional with stable cash flow. Property type like office, multifamily, industrial and self-storage are the ones they are focusing on the most. And that's also reflected in the portfolio breakdown. Office represents 37%, which is quite a lot during these days where more and more people are working from home. Multifamily represents 22% and industrial represents 11%. They are also very well diversified by geolocation. A thing that I'm more and more focusing on is the debt to equity ratio. It's very important for companies like ACRE. With a debt to equity ratio of 2.1, they are doing a great job, so this looks very good to me. In here we see that revenue and net interest margin have increased in the recent quarters and year over year, so this comforts me a lot. But total revenue is nearly flat year over year. And a very important number here, income before taxes, is also down quite a lot, which means that earnings per share is also going down as well. And of course, I don't like to see this, so it's definitely something to keep your eye on. And now that we know more about this company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. ACRE is a 635 million market cap company with a PE ratio of 14, which could indicate that they are undervalued. Later in this video I will show you my 3 price targets for ACRE, so make sure to watch until the end, since PE ratio is only telling a small part of the full story here. Revenue is at 108 million, and in this graph we see that revenue is going up in the long run. However, most recently revenue is flat, so that's something to keep your eye on. Most recently margins started to decrease as well. This is also something that I don't like, of course. EPS is also going down most recently, as we see in this graph, but also in the earnings report. Again, something that I don't like. Analysts expect EPS to increase quite a bit this year, but next year it's expected to decrease again. Revenue is expected to grow around double digits, with 2024 growing at mid-single digits. Return on assets is sitting at 1.5%, which is too low in my opinion. Return on equity is at 6%, which isn't also a really high number, but it doesn't concern me that much right now. Return on invested capital is not reported since this is a partly financed company and not a full REIT. Current ratio is at 1.35, which is around my preferred number, so this looks all good to me. And that's also very important since other metrics don't look that great right now. A thing to keep your eye on is the total debt and total cash. I prefer companies who can pay down at least a third of the total debt with the total cash. Right now total cash is at 147 million, while debt is at 1.74 billion. So it's very important that free cash flow is growing, since this is used to pay down debt, do acquisitions, buy back share and all other things. In here we see that free cash flow hasn't been growing really nice and steady, so this is definitely something to keep your eye on. And if we check the shares outstanding, we see that it's going up quite a lot in the past couple of years. But most recently ACRE started to buy back its own share. And to me it's very important that shares outstanding are decreasing, since it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyway, dividend yield is sitting at 11%, which is an insane number of course. Annual payout is at $1.32 and earlier in this video we saw that EPS is down quite a lot. And because of that payout ratio is really high, since this is going on for a couple of quarters. I think this could be a stock you might want to avoid unless EPS is going up again. The 5-year average growth rate of the dividends is at 4%, which is not that high, but I'm okay with that since dividends is already at 11%. There's no dividend growth because they work with supplemental dividends that increases the dividends. So does this mean that ACRE stock is a buy at current prices? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 5% because of what we saw in the earnings report and also because of the analysis estimations. For the mid assumption I'm filling in 6% and for the high assumption I'm filling in 7%. For the profit margin I'm filling in 37, 40 and 43. For the free cash flow margin I'm filling in 45, 50 and 55. For the PE ratio and the price to free cash flow I'm filling in 14, 15 and 16. My desired annual return is 15% since I can get an easy 10% average annual return with owning an ETF. Usually I use 12.5 but I want a higher margin of safety with this company. Right now ACRE is at $11.67. I hit analyze and we see a few green numbers. We have a low price target of $8.7 to $10.6, which is a decent drop from where they are right now, a mid price target of $10.47 to $13, and we have a high price target of $12.5 to almost $16. To me, the mid price target is the most justified here, so that means they are right in the middle of this valuation. My final conclusion on this stock is that I do like some fundamentals of the company. Dividends are at an insane number that can bring in a decent amount of money. However, it also comes with a risk. Some of the more important fundamentals don't look that great and worry me quite a bit. According to the price target, they might be undervalued, but I don't think it's worth the risk to invest in this company. For now I'm avoiding this stock because of what we saw in the earnings and the fundamentals and outlook. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.